My name is Ross Lindhout. I'm with Raymond's marketing communications team, and I'm joined today by Jim Carpp, Raymond's Chief Digital Officer, and Simon Micakaj, a retirement plan advisor with us. And we will be discussing crypto, specifically how to navigate it in the modern world of today's assets. We're really excited to talk about this topic, and I'm glad to be joined by Simon and Jim today. So we will get right into the conversation here. So Jim, I wanted to kind of start with you and set the stage for us. So could you share a little bit about what is crypto? Our audience has probably heard the word, but might not be familiar with all the details. So could you set the stage for us with that, please?
Yeah, thank you, Ross. So basically, crypto sits on top of a blockchain. And the blockchain, without getting into too much detail, is a distributed ledger. It's a technology that can distribute information across many different areas. And cryptocurrencies were a way of funding the usage of the blockchain. So for example, with Ethereum has gas. And every time you run a transaction, you fund it with Ether, which is a token, and that's a cryptocurrency. Now, what's happened is the network effect. So over time, more and more people have started using these transactions and leveraging these cryptocurrencies, and therefore the network effect basically increases the value. And when you get value associated with stuff and the network effect, then speculation as well as arbitrage comes into the equation. We'll talk a little bit more about that as we go forward. The beauty of a blockchain is that it develops trust. It enables strangers to be able to transact internationally across boundaries almost instantaneously. Now, there are some nuances depending upon how they build out the blockchain and how they add the equations to make sure that the blockchain is immutable. And basically, immutable really means is that once you cast a transaction or you mint a transaction, as the miners would say, that becomes part of the block and it cannot be changed over a period of time. We, again, won't get into a whole lot of the science. The interesting aspect of it is there's over 18,000 different cryptocurrencies today, and a lot of them serve different purposes. Some of them run on one blockchain. You know, for example, Ether has several different cryptocurrencies that are associated with it. You've got Bitcoin, which is kind of the granddaddy of them all across that different area. So a couple things that we can talk about here real quick is the NFTs, stable coins, and really important is the volatility. So what's happened over time is as people come and go into the market, buy and sell the different cryptocurrencies, there's a lot of wild swings, and it's kind of like a little bit like the Wild West associated with it. So organizations developed what they called stable coins, and they peg them to something. For example, Tether is pegged to the US dollar. And there are some questions about the validity of the total peg, but we won't divulge into that today. And so those stable coins then relatively run close to a dollar value. They might go up to $1.02, they might go down to 99 cents, but they're relatively stable. When you look at a lot of the other cryptocurrencies, especially here in the current market that we're looking at today, some of them have lost 95% of their value. And we can talk a little bit more about that as well. The next thing is the NFTs, and you might hear that topic. NFT is non-fungible token, and really it's a digital representation and ownership of a digital asset. You know, so for example, you can put real estate onto a blockchain, and then in essence, you can have a smart contract or an NFT, and basically that's the proof of ownership. So baseball cards can be traded on it. You've seen a lot of the artwork that's out there and all those different aspects of it. And those could be funded by the different cryptocurrencies. So that kind of gives you just a big picture at this point, Ross. I'll hand it back over to you.
Yeah, thank you. That was a great kind of overview. I know for myself and probably many others, we don't get that information easily to find. So to have it right here with someone like you to kind of set the stage for us was great. So thank you for that.
You're welcome.
So with that given information, I kind of wanted to pick your brain, Simon, a little bit on the retirement planning side of it. So could you kind of go into one, what is an asset, and when you're working with people to plan for retirement, how do you kind of handle assets, and how would crypto fit into all of that? If you could kind of share a little bit more about that.
Yeah, sure. Thank you, Ross. So when it comes to retirement and when it comes to assets, we invest in assets in hope of our money growing over time. And within our 401k plan, we encourage folks to actually consider their time horizon to help determine their risk tolerance. So the younger you are, the more risk you can afford to take in hopes of your asset growing. For retail investors, crypto can be a great alternative to traditional assets, especially for those who are looking for more exposure to the high risk, high reward investment, because it's really the uncertainty in crypto that's the main driver behind its volatility. So if you find yourself interested in adding crypto to your portfolio, be sure to set limits on how much to invest in each coin. This is what portfolio managers really do at the mega asset management companies when managing risk in various mutual funds, except now you are the investment decision maker in your own portfolio. Also to mention, as time goes on, more and more data is available for us to analyze. So the correlation between crypto and the stock market is increasingly tightening. More so with tech stocks of what we're seeing out there, right? So we must be creative when building our portfolio to invest in various coins so that we can maximize portfolio diversification. So be in it for the long term because prices can rise and they can fall dramatically day to day. As Jim mentioned, we can see where the market is today in the crypto.
Yeah, awesome. Thank you. That's a great kind of, I like that we're getting the tie-in with crypto and kind of the planning aspect of it. I think that's a nice angle to come from. And so both of you have kind of mentioned the high risk, high reward, and the volatility. And I think that's a nice segue kind of into my next question for you, Jim. Could you kind of talk about what buyers should be aware of? Where is governance at this point when it comes to cryptocurrency, and what are we seeing as it evolves?
Okay, yeah, and this concept right here that you talked about has the attention of our lawmakers and regulators. So pretty much on a historical basis, when Bitcoin was the granddaddy that started everything, and they have when we talk about centralized or decentralized blockchains, there's a difference. Centralized would be, for example, if you take a traditional bank and you put your money into the bank, that's a centralized entity. And it's in control, like we have the Fed, the central bank, and that's centralized. Decentralized is basically nobody's in charge, but it's kind of a misnomer. And what I mean by that is Bitcoin is considered to be decentralized, and that's because they distribute the ledger to several thousand people. Anybody can download the Bitcoin ledger and look at it at any point in time. And it gets updated about every 10 minutes or so. And there is a governing body that does the coding, they vote and do all these different aspects of it. But there isn't one central authority like a government that's in charge of those things. So the cryptocurrencies have grown over a period of time. And the United States government's been watching. And, for example, China outlawed the mining of Bitcoin and kind of shut down the whole aspect of it, because it's kind of outside the norm. The governments are not going to lose control of the money supply because they can control and, help the economy up and down. That's pretty much what the central bank does along those lines. So the cryptocurrencies have been kind of on the fringe. And so the SEC has not had any regulation over it. And then the lawmakers are out there looking at it. And you've got people like Elizabeth Warren who has concerns. And then on the opposite end, you have what they call Crypto Mom, which is Hester, and she's a lawmaker that's very pro crypto. So right now, today, it's pretty much the Wild West. And what I mean by that is there is not a ton of regulation. Now, from what I understand from an institutional perspective, there's a lot of institutional investors that would like to be able to get into the crypto space, but they've been on the sidelines waiting until something happens and we can get the regulation. And I honestly believe that it's pretty close here. And the reason I say that is just recently, if you do follow the cryptos, there's Terra Luna, which is a cryptocurrency, and it had a stable coin associated with it, which was UST, and it imploded here just recently within the last couple of weeks. And we're talking that at one point in time, I think Terra was, or the Luna, that's what they call it, Luna, for the Terra coin was trading at $250. And I believe it's dropped down to like 95 cents. And it might be back up because, it kind of moves back and forth. And it really, to kind of give you just a little bit of a backdrop, and I'll try not to get into too much detail on it, but they had a correlation between the Luna token and the UST, which was the stable coin. And they allowed people to what they call burn. They could trade. It's like, instead of calling it burn, you could trade a Luna for a UST and then hold on to that UST. Okay. And that's the stable coin. Because again, people don't want the volatility. You can park your money in a stable coin and it might go up to $1.02, might go down to 98 cents, but it kind of goes back and forth. Well, a couple times, the UST went maybe down to like 91, 92 cents, but was able to make its way back up. Now, the difference with the UST is it wasn't pegged to the US dollar, for example, like Tether claims that they are. It was basically algorithmically manipulated to always keep it around there. So they built in code to buy and sell depending upon how it went up and down. But here's what ended up happening is there was a bit of an arbitrage that was played. And that's because of, for every UST, you could trade it in for $1 of Luna. Okay. So you could, when they talk about burning things going back and forth. So UST fell to 99 or 91 cents. So what do you do? You go, wow, I can make 10 cents for every one I own. Right. I'll flip it over to Luna. So then everybody started doing that. And then Luna had just all of this sudden everything there. And then there was a large contingency of sale for the Luna. So basically everything spun out of control very quickly, and the UST dropped and it kept going down, went down to 30 cents and all these different numbers across the board. Well, then the foundation, which is the group that is kind of like the governing body, when I said decentralized versus centralized, they had, I think it was $18 billion worth of Bitcoin that was available as a backup. So they started selling their Bitcoin and then pumping that money back into the Luna. But unfortunately, things had gone so wild, so Luna spun out. Now, the reason I spent so much time talking about that, hence, is the governance play. Okay. So in these types of things, I mean, people got wiped out. There's billions of dollars that have disappeared. And so now a lot of the players in the crypto market are basically saying, hey, the FDIC has that where you can, if you're insured up to, I think it's $255K if you put money in the bank. Why can't we have something like that? And then I just recently read today that people are actually putting lawsuits in against the primary drivers behind the Luna and suing them for their lost funds. So, the net of everything is that regulation, for some people, it's a dirty word. And they're concerned. If you look at who started this whole cryptocurrency, was the cyberpunk community. If you go back into the history and go through a lot of that, it was a lot of people who wanted outside of the mainstream system. Well, now it's really grown to the point where there's a lot of people involved. And now the governments are looking at it and they're basically saying, hey, you know what? We've got to protect some people here because there are, unfortunately, some bad actors that are out there. And there's some conspiracy theories as to how the whole Luna thing blew up and it was intentional behind some different players, but we won't get into that part of the conversation. But in either case, I'm in the middle. I think that we need to have some regulation that's going to make sense to basically put some protections in place because there are unfortunately things that do happen and occur. So that's kind of the big picture there. Back to you, Ross.
Yeah. No, thank you. No, I mean, I think that was definitely very helpful information. I think it sounds like, to your point, there definitely needs to be something. Right now, it's kind of the Wild West, as you've said. And so it'll be interesting to see how it develops as time goes on. So
I think they're going to move pretty quick here, too.
Yeah.
Especially since
after that large event, I'm sure they definitely are looking at how to avoid a repeat of that. So we've kind of heard a little bit about what cryptocurrency is and what the risk and the reward is and the governance. And so I wanted to throw it back to Simon a little bit It was mentioned earlier, there's 18,000 different cryptocurrencies available. So from your perspective, when it comes to assets and planning, is there qualities or different types of cryptocurrencies that would make sense for a business or individual to get involved with? And what would that look like? And what would your thoughts on that be?
Yeah, absolutely, Ross. With the 18,000 different coins out there, I mean, one thing is for certain that we know is they won't all flourish, right? Especially with so many of the pump and dumps and the fake coin scams that are going on. It's easy to really get caught up in the headlines or just buy a coin because it's low. And that goes back to the verbatim buy low and sell high, but low prices are not always a good bargain. And sometimes their prices are low for a reason. However, a few of the metrics that I consider before investing money into any coin. First, I look at its use case, right? How usable is a cryptocurrency is what determines its adoption, right? Also, I look at the future. Is there a clear roadmap of the future of developments, as well as a reason to be optimistic for the gains, okay? Also, I look at the team. Is there a team of developers out there with a track record who have a successfully launched projects previously, or any, preferably blockchain, but who are you actually investing in, right? And there's a ton of resources and information out there. But for anyone who is new to crypto, okay, the best way to start building your foundation is to take the time to educate yourself in the space and begin learning the lingo. The more you start questioning, the more you'll really understand how to differentiate the coins from one another. So if you're thinking about investing in a cryptocurrency that is launching an ICO, which is also called an initial coin offering, which is similar to stocks, you've probably heard of an IPO, which is the initial public offering, or any other kind of crypto project out there, your first stop is reading the white paper. And each coin will have its white paper out there. And here you will find information about the solution to a specific problem, right? The team behind the crypto and the project's roadmap. And these are all important factors assessing cryptocurrency. So there's a good website out there that I would recommend to start your journey. And that's coinmarketcap.com. Here you can look at a lot of the data, historic data for those who would like to learn more about what's behind the coin and its founders. Take a look at coinmarketcap.com, and it would be a great place for you to begin. Back to you, Ross.
Thank you. Thank you. I think this has been a very fruitful conversation. I know I've learned a lot, so I'm sure our audience is going to find this helpful as well. Are there any closing comments or last things you guys wanted to add to the conversation before we closed it out?
Simon, you want to go first?
Sure. So coming from the investment perspective, please only risk what you can afford to lose. That's it.
Nice and simple. And Jim?
Yeah, from my vantage point is that there's cycles in every market. You can see it in the stock market, in commodities, across the board. And so there's going to be cycles that happen in the cryptocurrencies. And so, starting back to the beginning of our conversation, we talked about the blockchain. So the blockchain is a fundamental change for the future. And I believe it's here to stay. Now, the cryptocurrencies, like Simon was saying, not all of them are going to be around. So there's going to be a handful that survive, depending upon their use case along those different lines. So I think if you're interested in getting into the market and purchasing the cryptos, one, you have to be patient. Two, you have to be very brave, because there are the big swings that are associated with it. And that, right now, for example, if you're to go out and look at this stuff, there's red all across to all of the different cryptocurrencies. And like Simon was saying, it kind of follows a little bit of the tech aspect of the stock market. People have talked about Bitcoin being digital gold, and it's a safe haven. But if you saw back in 2020, at the beginning of the pandemic, Bitcoin tanked right along with the stock market and eventually came back up and then went to some all-time highs. Since last May, it peaked and then it's been slowly chipped away to about half of where it was. So really it's going to be a patience game. I think for the long haul, there are going to be some really good opportunities and some real good business cases associated with it. And I think it's going to fundamentally change the way that we operate as a society. You've got the Federal Reserve looking at the central bank digital currencies, where we could be replacing cash. I mean, China has already taken the yuan, and they've gone with the cryptocurrency nationwide for the Chinese. So there's going to be a lot of very exciting developments, and I could see them playing out in the next 5 to 7 years. It's going to be probably a crooked path, and there'll probably be a couple more booms and busts associated with it. But I think this is the real deal, and it's going to take us to the future. Thank you for coordinating this and giving us an opportunity to get out there and talk to people.
Yeah, of course. Thank you to you both for joining us.
Yeah.
Appreciate it. Have a great rest of your day, and we'll see you next time.
Thank you both. It was fun.
Thank
Take
you.
care, bye.
Bye.